All right. Welcome back, guys, to my YouTube channel. As you guys know, that today is a Tuesday. Being a Tuesday, you can see already know that the markets are open. Guys, roughly we can see in our daily time frame in gold. You can see that market is trying to react from this area here. Came trying to bounce retest. Maybe the retest is coming. Remember, this is also another sensitive level here. This one you can see. Basing on our bias, we are looking closely that if a breakout happens from this area here, and you can see that the market is trying to react from here and go to the what, to complete another head and shoulder pattern before the market continues to the downside. So we are waiting for the market to what? We are waiting for the market to break this area here, this key zone here. After breaking, you could see that you see a retest, then the market is going to bleed to the what? To the downside. So this is my bias on gold. let me know in the comment section what I also thought on this, but we are paying close attention this week. Remember, you can see from the news, you can see, if you check news today on our Forex factory, you can see that at being a Tuesday 30th, you could see that the news we are expecting today, it's a red folder. We are expecting a card, Canadian dollar, any frequency containing a Canadian dollar. Just know that it's going to be massive. So they are going to reach their GDP. So, and we look forward for what, to see what is going to come. But basing on the DXY, you could see that the market has been what, in the down uptrend, right? The market has been in the uptrend, and remember, these central banks are saying that they are expect to reduce dollar exposure. So that means we tend to see that the DXY dollar index is going to be more stronger than the previous week. So roughly, you could see in a weekly time frame, you could see that gold has been moving in the what? You could see these are weekly scenario. So that means we are bullish in momentum, right? So, and remember, it's a key level here. This is a key level, and remember, DXY broke that key level. It broke that key level, as you can see. Let me zoom it clearly. You can see it broke and it's trying to come to give us a retest. So we look forward that the next high to be taken, it will be around this one. So our target will be the first one, then the second target will be what, to complete up to what, this key level here, So remember, we also in what, a third touch of the trend line, and you know from the rule of the trend lines, a third touch always moves what, market to the upside, right? So this is the first target. The second target will be this one. So I hope the markets are going to what, to move to the upside. So in the US 30 index, these are indices. You could see momentum is always bullish. We are always bullish in momentum. Remember, it's going, gave us high from here, came, made another higher, it came back. It's now breaking what, the previous high which it made before it came for retracement. So we are expecting at least to come slightly around this area here before before it moves, continues the what, the upside. Or what is going to happen, if you zoom in the daily time frame, you could see that yes, from this retracement here, we could see that the imbalances which are there, you could see this another imbalance here. We'll see which it was left, another imbalance here, though it market tried to come back to retest to check on it to fill the orders, but it was not completed, right? So, and remember, if you see a key zone here, that you could see here that the market is also trying to what, these are inside trend line, right? So if you go back in the 4-hour, you could see that this thing is very clear that in the first touch, always first touch, second. So we are waiting for the what, for the third touch to be what, to be shown before what we join to the market. So right now I cannot say that I'm going to jump on this kind of trades, because the market is still, it has overbought, right? So we look for a retracement before what we buy. So remember, you could see that there is also another imbalances here which were not filled, could see here. So, and it's matching basically on our support here. So this is what we're waiting for, the market to at least retrace to our area of the key zone before you do what, an entry to the what, to the upside. Or we look for the market to what, to break. After breaking this area here, if the market breaks this area here, we look for market to go to the downside where the imbalances were, right, from the higher time frame, right, where the imbalances were left from the higher time frame. So let me know on your comment section what are your thoughts on this index US30. When you go through the if you go through the DX in the DAX German 40, you can see we are still also what, we are still also on our daily scenario, we are still also what, bullish. So, and remember, we are bullish. You could see here that we are always bullish, right? Is that touch, first touch, second, third, you could see, but there is an opposing trend line which is coming. A break from this opposing trend line to the upside, like this, you have to see the market going to the what, the upside. If it doesn't break, that means we are capable of seeing that what are the liquidities. The liquidities will be taken here. The proximity of the liquidities, it will be the first one, it will be there. The second, you could see. The third, it will be around here. Then you see a liquidity as is pending liquidity down here up to this area. So if you don't see a breakup from these keys, okay, let's go in the 4-hour and you see you could see if it breaks that, the unopposing trend line which is up there, so we move to the market what, we have to see that the market is going to the what, to the downside. So let me know again also in the comment section what are your thoughts on the what, the German 40. So a Nasdaq, let's go and see the Nasdaq. You can see literally that it has been, Nasdaq has been obeying the what, respecting the key zones here. You could see that it has been after a break, it came, you could see that when you mark our levels here, you could see that this is another key sensitive zone here, right? So it's also another sensitive zone here around here. So if you see a break here, it came back, retested, moved to the what, aggressive move to the upside. So again came back to the zone, broke the zone, came back to retest, moved aggressively to the downside. So again it came, broke, came back, gave us a retest and moved to the what, the upside. Again it has been consolidating within these zones here. So you can see here clearly here that it broke, gave us a slight retest, broke, then again it broke, gave us a slight retest, then it moved upside, then again after breaking it's coming, try to give a retest but moved to the downside, but so buyers were more in this, were controlling this market. So again broke. Now we are waiting for what? A retest here. If it doesn't give us a retest to move to the upside, we look for the market what? You look for the market what? To move to the upside, or if it comes back within this zone, we are going to trade again to the what? To this zone, this downer zone here. So you can see that this is my thought on this for these buyers for this week. So a quick update on my other first got funded 5k account, which I previously showed you guys in the previous video. You could see, guys, I messed up with the got funded. You can see this email. So a trading rule was breached. You can see it was sent that the account was what? Breached, right? So, and you could see that the account has experienced a daily drawdown, not even a maximum drawdown level. So you guys, you could see that let me see in the account. So you could see that the daily drawdown level reached, it was not, you could see that from the full red bar here. So yet we are what? Yet we are down in this account. We are still up in the, we are still at 136.39 left as a maximum drawdown level. That means I still see sense here. I still sense some progress, because for you to breach an account not in the maximum drawdown level, that means your model plays. So, but really this only that the drawdown which made us to breach our account was a daily drawdown level. So that means they had to close our positions, and they flagged it off. Anyways, I don't mind, because I'm still improving. There is still room for improvement. So hopefully next time you won't let this mistake happen, that if the drawdown level, you have to keep on checking the buffer of your drawdown level, daily drawdown level buffer, before you do entries from what. So you could see trading days are accomplished. There were 3, but we are still 6 up. So this account we have been trying. We are seeing sense, some room of improvement. There is some room of improvement. You can see, if you can, let me zoom the trades. If you see my risks, even though the risks 0.5 at 0.5 slots, there are 36 1. This is a break-even trade, and he moved us out. So remember, with a two lot, still it was around 1%, 1.2 to 1.1. So 0.9. Still the risk was always in the same buffer zone. This also again another thing we could see. If you could see, when that the only risk I took much was what? This index, it was 1, but it went up to 67. So that's around, it made us what? But you could see that next time we're gonna try to adjust our risk at least to be the same whenever we take any trade, always. So you could see this was 1, but still 141. At least it was below. Was below 1% of the account. You could see this was a trade Nasdaq. It was a comeback from the drawdown level. We hit 520. So you could see that none of these will hit the 1%. That means we are within the 1% buffer of the account. So I see it still smells change, because this account have been able to get back from the drawdown back to back. Even though you could see from the chart here, the graph, you could see it went back. This was what? This was the account. It started, it came back again. It went. It went back to the account again. It moved down. After moving down again, we went back to the what, to the account. You could see from now, that's when he crossed the line, and a daily drawdown level caught us off guard. You could see from this red dotted line here that it was a daily drawdown level which caught us off guard, but we still had what, this yellow line represent the maximum drawdown. We still had some bullets left for us to keep on firing to the what, the upside, but that does not mean that we're gonna give up on this. So hopefully we are now having the one account which is what, a 10k fund account. So this is a 10k still, a pay later. We still have our pay later account, so only that this is the account we only failed. So we're gonna move forward, and hopefully we're gonna see how we're gonna make it. Guys, make sure that you hit the like button. Did not subscribe, make sure that smash subscribe button, hit the notification bell so that you get the same content like this. See you guys in another video. Cool. Bye.